What if the one tool you use to feel in control of your financial future is actually the very thing designed to make you lose it? Every morning, millions of us turn on the television, open an app, and are greeted by a wall of scrolling numbers, flashing reds and greens, and the confident voices of experts telling us where the world is headed. We see it as a map, a source of vital intelligence to navigate the treacherous waters of the market. But this perception is built on a fundamental misunderstanding. The financial news isn't a map, it's a carefully crafted story, and in this story, you are not the hero, you are the product. It thrives on a battle happening not on the trading floor, but inside your own mind, a battle between fear and greed, between patience and panic. In this video, we are going to dismantle the financial news machine. We will explore not just what it shows you, but what it's engineered to make you feel. We'll look at the psychological triggers it pulls, like FOMO, that nagging fear of missing out, the anxiety that everyone else is on a rocket ship to wealth while you hurry stuck on the launch pad. And we'll examine confirmation bias, our brain's tendency to seek out information that validates the decisions we've already made, turning news channels into our personal echo chambers. By the end, you won't see a ticker symbol the same way again, because you'll understand that the most dangerous risk isn't in the stocks you buy, but in the stories you believe. Most people believe the purpose of financial news is to inform. It's a public service, a way to democratize information that was once held by a select few on Wall Street. We see headlines like, Dow hits all-time high on strong jobs report, or tech sector surges as analyst upgrades Megacorp to a strong buy. We watch seasoned experts debate interest rates and corporate earnings. The implicit promise is that by consuming this information, we become smarter, more prepared investors. We can spot trends, avoid pitfalls, and make rational, data-driven decisions. The entire presentation is designed to project authority and wisdom. It feels like we're getting an inside look, an edge. But if this information truly made us better investors, why do decades of studies show the exact opposite? Research from institutions across the world has repeatedly found that the more an individual investor trades, often spurred by news and headlines, the worse their returns are. The data is clear. The most active players are often the least successful. This isn't just a small statistical anomaly. It's a foundational crack in the entire premise of the financial media. If watching the news was the key to wealth, the most devoted viewers should be the richest. So why aren't they? What if the constant stream of breaking news isn't a feature but a bug? What if its real purpose isn't to inform your long-term strategy, but to provoke a short-term reaction? To understand this, we need to look beyond the numbers on the screen and turn to the field of behavioral economics, specifically the work of Nobel laureate Daniel Kahneman. He proposed that we have two systems of thinking. System 1 is our fast, intuitive, emotional brain. It is the one that feels a jolt of panic when it sees a sea of red on the screen. System 2 is our slow, deliberate, analytical brain. It's the one that builds a spreadsheet and reads a 10-year financial report. The business model of financial news is built almost entirely on capturing the attention of your System 1 brain. It doesn't sell data. It sells drama. A headline that reads, "Company increases revenue by 4% quarter over quarter" is boring. It appeals to System 2. A headline that screams, "Is this stock the next Amazon, or is it about to crash?" creates urgency, fear, and excitement. It's a story, and it hooks our emotional brain. We think we're getting analysis, but what we're actually being served is a shot of adrenaline or a dose of anxiety, both of which lead to impulsive decisions, not sound ones. So here is the first critical revelation. The financial news isn't a product designed for investors. It's a product designed for advertisers, and its success is measured in clicks and viewership, not in your portfolio's performance. Your calm, patient, long-term success is fundamentally bad for their business model. If this still seems abstract, let us look at the most dramatic example. The GameStop saga of 2021. The financial news didn't just report on this event. It became a central character in the story. Every day, channels breathlessly covered the David versus Goliath narrative of retail investors taking on hedge funds. They amplified the hype, featured the most extreme stories of overnight millionaires, and created a global spectacle. The coverage wasn't an analysis of the company's balance sheet. It was a non-stop emotional roller coaster. And what was the result? Millions of people, driven by the news-fueled FOMO, bought in at the absolute peak, only to see their investments evaporate in a matter of days. The news machine created the frenzy, profited from the eyeballs glued to the screen during the mania, and then calmly reported on the devastating losses of the very people it had lured in. It was a perfect demonstration of its true function, to monetize volatility. If the news can get it so spectacularly wrong, and in fact, contribute to the disaster, then we must ask the real question: what is it they are actually selling? If it's not financial wisdom, what is the product? The answer is that they are selling a feeling of certainty in a world that is fundamentally uncertain. We are pattern-seeking creatures who are deeply uncomfortable with randomness. The idea that the market is a chaotic system influenced by millions of unpredictable factors is terrifying. So we turn to the news, where a confident-sounding expert in a suit tells us exactly why the market did what it did today and what it will do tomorrow. It's a comforting illusion. This isn't a modern phenomenon. It's the same psychological need that fueled the Dutch tulip mania in the 1600s, where pamphlets and word of mouth, the media of the day, created a speculative bubble that eventually ruined an entire economy. The technology changes, but the human desire to believe there's a simple story explaining a complex reality does not. The news provides that story every single day. But I know what you're thinking. What about the experts who get it right? What about the famous investors and analysts who make legendary calls and are celebrated on these very networks? Surely their success proves the value of this information. This is where we run into a powerful cognitive trap called survivorship bias. We are shown the one analyst who correctly predicted the crash, but we never hear from the hundreds who predicted a crash every year and were wrong until they finally got lucky. We celebrate the fund manager whose high-risk bet paid off, turning them into a media darling. We do not see a broadcast dedicated to the countless others who made similar bets and lost everything. The news curates reality, presenting the exceptions as the rule. It creates financial celebrities whose real talent isn't necessarily predicting the future, but crafting a compelling narrative. Their confidence is their product. Their greatest virtue, their unwavering certainty, is presented as wisdom, when in reality, it is the purest manifestation of a system that needs to keep you watching. Their on-air conviction is not for your benefit. It is the core of their performance. So let's assemble the pieces. The financial news machine uses provocative headlines to bypass our rational brain and trigger our emotional one. It then creates compelling narratives of heroes and villains, of overnight success and catastrophic failure to feed our fear and our greed. It anoints experts who provide a comforting illusion of certainty, and it selectively highlights their successes while ignoring their failures, thanks to survivorship bias. The final critical moment, the point where the trap springs, is when this manufactured urgency pushes you to act. It's the moment you sell your solid long-term investments in a panic because of a scary headline. It's the moment you pour your savings into a hyped-up speculative asset because you can't bear to miss out. At that moment, you cease to be an investor and become a pawn in their game. Now that we understand the machine designed to make us fail, the inevitable question remains: what does it truly mean to be a smart investor in a world saturated with this noise? The answer changes everything.